Hi, everybody. Welcome back to another edition of VCTV with your host, Kyle Ellicott. Today, we're going to be talking about the success and failures of fundraising. Very important after coming off of one of the biggest years of venture capital and fundraising to date, seeing over $620 billion invested, according to PitchBook, throughout many different industries and globally in just 2021. Now, 2022 thus far in the first 3 weeks has been a little bit of a rocky start, but venture capital has not slowed down. We've seen new investments daily on a multiple. We've also seen new funds continue to be announced as well, not just that they're fundraising, but that they've completed. And then we have Andreessen Horowitz, who can't stop, won't stop, and now is going after more billion-dollar funding and looking at putting together two funds at $4.5 billion to start investing not only in crypto, but furthering investments in areas of biotech and general investments around technology as a whole. But what works, what doesn't, for you as investors and also for you as entrepreneurs? Well, we're joined by two outstanding guests and friends of the VCTV family to share their thoughts and insights with all of you, what they have learned, both sides of the table as investors and also working with entrepreneurs when it comes to fundraising. What works, what doesn't, lessons learned. We're going to break that down with all three of us here today. Before we get started, big thank you to the Token team and to Hasmic for making today's episode possible. Jason, kick us off. Your fans have been waiting. The Twitter sphere is blowing up. Give your fans what they've been asking for, a quick introduction, a little background on yourself.
Well, thank you, Kyle and the Token TV, for having me back. Excited to be here. My name is Jason Jacobsohn, managing partner of Propellant Ventures. We are a seed stage venture capital fund that invests in B2B business, B2B tech-enabled businesses located throughout the Midwest part of the U.S. I personally have been involved in the entrepreneurial and investment community for over 20 years in the Chicagoland region. I've helped companies raise capital. I've helped them with general advisory work, and I've really been on the front lines supporting the ecosystem. I launched the Chicago chapter of the Founder Institute, been doing that for almost 11 years now. So that's a pre-seed technology accelerator. We help people launch companies and grow the businesses as well. So excited to be here and happy to talk more about the success and failures of fundraising.
Absolutely happy to have you. Your fans went wild. The crowd went crazy. It didn't stop, Jason. So wonderful intro. You gave your fans what they were looking for. Kate, you're up next. Welcome back. Always a pleasure. A little intro, a little background.
Great to be back. Happy New Year, everyone. You know that typically as entrepreneurs and founders ourselves, we wear a lot of hats. But this year, I'm very focused on Chloe Capital. I'm a co-founder and partner of Chloe. And we're a movement-driven venture capital firm that invests in women-led technology companies around the world. And in addition to investing with a gender and diversity lens, we also partner with universities and foundations and corporate innovators to host kind of like Shark Tank events. They're Invest in Women programs, and together we help women raise millions in just an overnight fundraising experience. So that's what we're working on. It's kind of three jobs in one. So we're right in the trenches with all of our founders, raising funding. We do have an impact fund, which we raise and deploy and raise and deploy. And then our programs are what helps fuel it all. They drive the revenue. So as an underrepresented founder, as someone who is out there raising funds in a male-dominated industry, I certainly do feel the burdens and the hurdles and the pains. But of course, I'm just one perspective here to share my story today.
Awesome. Well, to both of you, we were talking beforehand, pre-show here, a little bit about some of our lessons learned and things that we're seeing as investors and entrepreneurs through our journey of fundraising, whether that be here in January of 2022 or what we went through during the holidays, which we know can be ups and downs, lefts and rights of fundraising. And even now here in January, we were just speaking about, has been a completely different experience than any of us have experienced in the past for January. Usually January is that kickstart to the year, closing funds from the end of the year previous, or jump-starting fundraising before the kind of end of the year, excuse me, the tax season, and then also kind of the summer cool down for the second half. But this January is just completely different. I want to talk to both of you to hear your lessons learned. Maybe a story of failure first, and what you went through either as an investor or one of your entrepreneurs went through. And Kate, let's start with you. You're doing the hat trick over there, all these different businesses.
Yeah.
Talk about some of the failures, the hard lessons learned in fundraising for those that might be going through similar process right now.
I mean, we are really building the ship as we fly it. And there wasn't a lot of examples out there for us to gain inspiration from when we went to launch Chloe Capital. So for us, it's constant mistakes, it's constant failures. I can say that what we first did was before we launched a fund, we went out and we tested the waters by creating a program to educate women on how to invest. And that's how we made our first investment. And that kind of catalyzed our program and our movement to invest in women. But then to gain a track record as emerging fund managers, we opened up a special purpose vehicle and we went on a tour and we invested in 5 founders in 5 cities in 5 months. And that was all under a special purpose vehicle to, again, gain us a track record. And then we went and opened up the fund. Now, when we opened up the fund, it was in May of 2020. It was during all of COVID, but we had built all the infrastructure. We had but no choice but run into the fire and just hope that when we came out the other end, we would still be, thriving. And the risk paid off. And we did make it out the other end, and we continue to raise and we continue to deploy. And now throughout the Chloe Capital portfolio, we have 17 women-led technology companies, okay? So now herein lies a little bit of the tricky part. We've raised and we deployed, which means that we're still raising. We're not exactly getting that management fee that pays our salaries. But we also now have 17 children that we are feeding with our time and our resources and all the things. So we have grown and we've grown quickly. And now as founders, it is up to us to continue to make the decision to hire and set aside maybe our salaries and continue to put forward that sweat equity and that belief in ourselves. Or if it's just time to fold them, and as my father would say, throwing good money at bad money, we certainly don't want to think in that direction. But these are the issues as a founder that you're always having to take away with you. I don't know if that is a failure per se, because we're not there yet. We're living in the moment. So I guess I'll check back in 6 months and I'll let you know how my bank account is.
That's a perfect story, though. I think that's a very big misnomer when you hear about fundraising as an investor, or again, the hat trick, the trifecta, as you and the team at Chloe Capital have put together, is that it's just one and done, right? We see headlines, new fund announced, $75 million fund, $50 million fund, $5 million fund. To your point, there's so many pieces that go along, and you are constantly learning during the process. I mean, from the documentation to taking investors and selling investors yourself, to then closing, but then not closing. That's the difference. As founders, typically you close an investment and you go. You're done for a minute before you start the next round. Wow. As investors, you can have multiple closes. So you're constantly making good and bad decisions, and those that are questionable in the middle, because you're also judged on the investments you make and how that continues for the next call, for the next
fund. Line is, if you don't raise that fund, then you don't per se have a salary, because your salary comes out of the management fees. Right? Is that clear, everybody? Okay. Everyone thinks, oh, you're a VC, you're an investor, you must have a yacht here and da-da-da-da-da. No, we are mission-driven investors here. We are impact-driven investors. We are here to do well by doing good. But before you can do well, you got to put in that good. And that's the point where we are right now. So I guess a moral of the story before, I'm so sorry, Jason, to be on a soapbox here. The moral of the story is, if you are a founder who is out there fundraising fundraising and you have started your business because you want to get rich or you want to make a lot of money or etc., that will never sustain you, because there are so many personal sacrifices that you are going to have to make in your life, that it's got to be more for the money. Your heart has got to be in it somewhere.
Well, and the thing is too, is the majority of those sacrifices you don't know about until you get started and you learn, right? To your point, and Jason, we are going to come to you. Your fans are raving. Don't worry, you're still loved. But to Kate's point, I mean, you are giving up a paid salary to close or to raise and close this fund. If you don't close it, you don't get paid. Sacrifice number one, you didn't know about when you started, because things didn't go right, or they went wrong, they went sideways, things changed, right? There's so many lessons learned. And I think that's a good reminder for aspiring investors and VCs out there, but also for entrepreneurs. As the old saying goes, don't count your eggs before they hatch, essentially, or chickens before they hatch, because you just don't know what's going to come. So you've really got to stay close. And that's where things like modeling, where really being prepared as much as possible, knowing every detail you can, comes so importantly, and being ready to shift and shape as it goes. And also reaching out to Kate and Chloe Capital.
What could a potential solution be? The potential solution is maybe you go out there and you raise working capital first, to give yourself a little bit of peace of mind, give yourself that 1.5 year runway to build the infrastructure before you go out there and you start making those investments and et cetera. Because once it gets going, and if you catch on like wildfire like we did, there's just no stopping, and you're really just along for the ride.
Right. I mean, what Kate and team have done at Chloe Capital, 17 investments over the last few years here is incredible. And you're seeing that type of momentum for those listening on a much more aggressive scale as these new funds come out, because they have to deploy. So that's another thing that, we may not be aware of out there in the audience, is that when an investor closes or closing their fund, they have to deploy that capital. And like Kate says, once that ball gets rolling, it's rolling, and you can't stop. So Jason, we're coming over to you now. You're also going through this process. You also work with and run this accelerator with the Founder Institute. You are seeing all sides of the table, similar to Kate here, from raising a fund to helping entrepreneurs raise and building your own business. What is one of those failures, lessons learned in terms of experience that you and your team have gone through?
First of all, I don't know what a salary is either. So I feel we're in the same situation. Again, maybe it's not a failure, but it's lots of lessons learned. It takes a lot longer than you anticipate. A lot longer. At this point, I thought we would have had all of the money raised. That's okay, because I realized raising money takes time for entrepreneurs, no matter what side of the table you are. Also, what I've learned is generally raising money for a venture capital fund is usually harder than for a company with a product to show traction, to show revenue. So that's something I wasn't anticipating, and so that's what a lot of people have told me, and I do believe that. We spent a lot of time thinking through our thesis before we officially launched, and so that was some customer development research with investors, and it didn't resonate at first with people, but as we talked to people, it took us about a year or so to figure out, put the infrastructure in place, talk to people, get their feedback, get their interest. And, about a year later, we finally figured out our positioning in the marketplace, and it resonated more with people. So then that started to accelerate the capital raise. But either way, it takes a long time. And I also, I was at a fund previously, and I learned a lot from that fund of things to do. But when you're doing most of it yourself, it takes a lot longer, and you're learning along the way. And I did bring good people around me to support me and help in certain areas, but still takes a lot longer than you anticipate. So I wanted to have everything set up legally, the branding and all that stuff set up before we went to market, so to speak, and started raising money. I wanted to show that, hey, we're serious. This is real. We're ready to take your capital. But I've seen some investors that they go right away from the beginning before they have anything set up. We wanted to make sure we were able to take investor capital once they were ready to invest as well. So we made sure we had everything set up ahead of time. So it's been a long journey to get to this point, but we're excited where we're at. We've made 5 investments now. We're also doing a rolling close. We had a first close, but we don't have any other closes until we decide to stop fundraising. That way we're able to deploy the capital as it comes in, and that's allowing us to build our portfolio, and it adds to our story, and there's something more tangible now as we're talking to investors. So learned a lot along the way. It definitely takes longer than you anticipate. Same thing for entrepreneurs with a startup. I'm building a startup per se as well, and everything takes usually twice as long and 2 to 3 times more expensive. You need more capital than you think, at least for a startup building a product.
That's great advice.
Yeah,
and it's great advice. I think, one thing you called out too is, that support system around you, having those mentors, having those advisors, and not just the lessons learned previously from the, other positions you had held, but also you've built this network. So not only do you have validation if someone needs a reference, but you also have someone else to go to support you, to build and support that growth of network as you need it, and you build your fund or company as well. I want to switch topics now. So we've got some of the bad and the ugly out of the way. Let's talk about success and really more advice for entrepreneurs listening for this year in 2022. 2021, wild year. Again, 621 billion was the exact metric from PitchBook that they recorded. The year previous, 2020, was a little bit less for obvious reasons, and 2019 was a little bit around that same number as 2020, give or take. 2022 is a gamble right now. We don't know if it's going to be much bigger, which is what we're all expecting, but it also could be a little rougher for fundraising. We've seen outstanding growth in valuations, for better or for worse, where valuations at the pre-seed, seed, and early series have 2x or 2.5x what they were the years previous in terms of size, in terms of average globally, just to be a note on that. When we go into a year like 2022 has started, a little rough around the edges, unclear, uncertain as to what's coming next, what advice do you have for entrepreneurs going out to raise capital, whether that be now in Q1 or at any point this year? From all the lessons and all the cycles we've been through, I think this is a great question for both of you. And Kate, I'm going to start with you on this one.
Oh, sure. I mean, I got a lot of tricks up my sleeve. For some reason, we're fantastic at raising a lot of capital for our portfolio companies and the companies that go through our cohort, right? I mean, the visibility and the connections alone through one of our Invest in Women programs is about 2 million raised per each cohort member, and 5 women are selected each program. So we're really good at that. And throughout the due diligence process of constantly screening these companies, constantly looking at their data room material, here's some advice. 1, every investor is going to have a different process for how they collect information and they get to know you and your investment potential. So it's just par for the course. Try to create as much standard documentation and process as you can, but know that you're likely going to have to upload it to various different portals. Just keep track of it all, right? You got to get yourself a great CRM, whether it's HubSpot or Nutshell or Sugar or otherwise, because that's, again, keeping track of the touch points. You are likely not going to meet an investor in an elevator, give a 3-minute elevator pitch, and go home with $1 million. But throughout time and throughout these various touch points throughout the relationship, maybe it's a LinkedIn invite first and an email second and a coffee next and a workshop the next time, whatever it is, you're keeping track of the relationship building and the information that you're sharing with them. So if you say that you're going to do something during the coffee session, then by the time we get back to the table and we have a little lunch together, I want to hear not only that you've done those things, but what other 3 things you're going to be working on for the next time we meet, right? And you can only keep track of all of that data in a CRM. And then the last thing is for your data room, financials. Oh boy, they're always so messy. I don't know. I mean, just get yourself with a good accountant, someone that understands what needs to happen. You know that you have to submit to your investors projections for at least 3 years and finances for at least 3 years if you've been in business for that long. So give them the profit and loss statements, right? Just do it. Have it in there, clean in an Excel spreadsheet. And if you are an international founder and you are seeking capital from an investor who's in the United States, please do us the courtesy of converting it into US dollars, or at least providing a disclaimer. And then one more tangent to that, if you have grant money or any non-dilutive funds, please don't include that in your revenue. You can put that in your fundraising, but it should be a separate line. Okay, there's some 2 cents.
There you go. You all got not just 2 cents, you got 50 cents. You got a full dollar worth of investing advice right there, and what to do around your fundraising. So every single person, replay that entire segment about 4 times over, 5 if you need it. Make sure you're in line with what Kate said. Now, Jason, you've got to follow that up. Same question. What did Kate miss? What advice would you give to those companies going into fundraising this year here in 2022?
I really think the same process that they may have done last year. There's a lot more capital out there, so there is more potential opportunities to raise capital. So I don't think this year is any different. There's just more capital available, continually more capital available. Either way, I would build those relationships early, seek out those investors, make sure you do your research, make sure that they are a right fit for your stage, for your industry, your geography, if that's important, and then build those bridges, get introductions from people that know them. That's the best way to do it. I wouldn't do blind emails or you can submit something on their website. We do get a lot of submissions. But I would ideally go through a connection and start early, even if you're not ready to raise money right now. Build that relationship, put them on your distribution list of updates on the business so they're know what's happening, and then by the time you're ready to raise capital, they're already familiar with their business. Also, and this goes without saying, but make sure you have good, Kate mentioned it, but good materials, especially your pitch deck. Make sure you tell a good story, that it makes sense, it flows well, it's professionally done. Spend the time to do it. You need to hire someone to help you with your materials. That's fine. It should be more on the graphics and the flow. You should be able to tell the story, but either way, make sure the materials are good. And it's kind of like a drip campaign as well. Just start sharing a little bit at a time. You don't have to share everything at first, but maybe a couple sentences, and then maybe a one pager, then a deck, or then a pitch, a live conversation. You don't have to share everything at first. Get them excited and interested to want to ask you for more. Data room is easy to share as well, but sometimes you want to wait until the investor asks for the data room. We don't always want to see everything unless we're interested. So just have different pieces to share and be open, honest. Don't mislead investors of your progress. We want honest entrepreneurs. We know it's tough early on, and so just tell us what's happening. We know that it takes time to generate sales and to build partnerships. But if you have some initial product market fit or some initial customer or user stats, that's always great. I mean, we come in early, so revenue's nice. It doesn't always have to be there before we invest, but make sure that you're building those pieces to get someone excited.
Agreed. And to both of you, in closing thoughts today, your pitch for why entrepreneurs should come and talk to you and your awesome funds that you each represent as well. And then where can they find you online to continue the conversation? Jason, I'm going to give you a moment to catch your breath. And Kate, I'm going to start with you on your closing thoughts and the pitch out there for Chloe Capital. And where can everyone find you along with Chloe online?
Oh, wonderful. One more thing for that data room is right now, with valuations being a topic that everybody is so hot on, it's not that investors don't want to pay certain valuations. We want to see how you're getting there. So if you feel that your company deems a certain valuation, then show us the revenue, show us the projections, show us the sales pipeline, show us your contract, show us something, that a competitive analysis, etc., that is going to warrant that valuation, and I'll tango with you. Why not? But if you just give me a number and say that's it, I'm not that interested. My name is Kathryn Cartini. Please call me Kate. I'm a co-founder and partner of Chloe Capital, chloecapital.com. We're a movement-driven venture capital firm. We invest in women-led technology companies at the early stages. So this is seed, seed plus, Series A stages. We love software as a service, finance, climate change, work and education, and healthcare are areas of which we really enjoy as well. We've made 17 investments, and in addition to investing, we travel around the country and we host programs that help underrepresented founders raise capital. Next, we're heading to Pittsburgh in April of 2022, and this is in partnership with Ascender and the Richard King Mellon Foundation. We will be making an investment at the end of this program, and fingers crossed, the investors that we invite to the show will also be breaking out their checkbooks. That's the way that we like to do it. So chloecapital.com, and you can find out more information about our programs and about our direct funding opportunities. I wish you all the best in this year, everyone.
Wonderful. Thank you, Kate. Jason, to you, why should everyone be talking to you, Propellant Ventures, Founders Institute? Where can they find both of you online to continue the conversation?
Excellent. Yeah. So as I mentioned earlier, our sweet spot is pre-seed and early seed. We're generally one of the first VCs, if not the first VC in a round. We invest alongside angels, angel groups, and other VCs. So we can also be a lead investor. So if someone needs that professional money in, we can be that anchor. And we are very focused on Midwest of the U.S. So I know boundaries are blurring these days, but we have still an underrepresented region here, and we have a lot of great companies here. So that's our main focus, is companies based in the Midwest. We may go outside of that at some point into other underserved regions in the U.S., outside of the coasts, but other regions that really are underrepresented with capital. But Midwest is our focus. We have a big network as well. We help our companies raise capital, find talent, find business development and revenue opportunities. And then those that are interested in starting a company, you can look at the Founder Institute, fi.co. We help companies launch firms, and we have 220 chapters around the world. I manage the Midwest region, but we've got chapters all over. It's all virtual right now, so you can plug in wherever makes sense for you. And those that are interested in connecting with me, you can find me, of course, on LinkedIn, also on our website, and my email is jason@propellant.vc. Thank you.
Wonderful. Jason, Kate, thank you both very much. To our audience, thank you so much for tuning in. If you have not done so already during this awesome conversation, please do reach out to connect with Jason and Kate along with myself. We'd all love to talk to you further about what you're building, some of the successes and failures you've gone through on your journeys as entrepreneurs and investors as well. But remember to add context when you reach out, where you heard us, where you met us, and what you would like to continue the conversation about. With that today, I'm your host, Kyle Ellicott. Big thank you to the Token team in Nehasvik for making today's episode possible. Until next time, take care.